Hey everybody, how you doing? It's Bruce here, Stock Markets with Bruce. Today's video here, March 2022, it's all about what is going to make the stock market recover and go back to those high prices we had back in November 2021. There's a lot to think about, and here in New York City, the boys and girls in the brokerage firms and the banks have got a lot of things on their minds regarding the world events that are going on right now. Whether or not these markets can recover. Here in London and in Europe in general, they have got a whole bunch of issues to deal with. There's a war going on right now in Ukraine. That has to be contained and hopefully resolved in the very near future. There's a whole lot of considerations here with regard to what's going to happen in the markets. Why and what will make the markets go back up? Well, here at the New York Stock Exchange, they are watching a whole bunch of different things at the same time. A couple of the things that are really concerning the market: inflation. If inflation can be tamed somewhat, that will take the heat off of central bankers and interest rate increases. Inflationary pressures are everywhere, but we have noticed just in the last couple of days, oil prices have really dropped off from that 120, 130 range, and we're now back into the 90 range. Guys like this are just rubbing their heads in frustration, wondering what is it going to take. Interest rates, of course, are low and are projected to stay low for quite some time yet, which is good for corporate America, good for corporate Canada, corporate Europe, corporate Asia. Low interest rates and lower inflation can really help the markets. If corporations can continue to earn capital like they've been making money the last few years with this kind of environment with lower interest rates or relatively low interest rates compared to inflation, that is a good thing for the markets. COVID is another one. Will the COVID virus be much lesser of a problem? That will supply or help us with the supply chain issues that we've been dealing with. Factories can stay open and we can get goods to where they got to go. Unemployment, there is no problem with unemployment these days. With very low unemployment and jobs begging, we have got the workers out there making a lot of money and able to spend. And there's a significant consumer demand still out there that will continue to be needed to be fed. And these are all ingredients to make the markets go higher. There's something else happening in the marketplace that some people keep forgetting about. Corporate America and corporations around the world, they have stock buyback programs going on. And we're looking this year at an all-time record amount of money that corporations are going to spend to buy back their own stock on the open markets and cancel certificates from circulation. The total now is estimated to be $1.2 trillion this year. That is over $100 billion a month coming into the stock market from the companies themselves that are buying up their own stock and retiring certificates. This is a huge amount of stock disappearing from circulation, and of course a shortage of stock with expectations of higher earnings, lower interest rates, and low inflation means that stocks get accumulated by pension funds, hedge funds, mutual funds, and all kinds of investors. The next thing you know, there isn't a lot of stock around at the low prices. You have to go chase it higher. Next thing you know, you're running into new record highs for the markets, and that is what could make the markets go higher. Food for thought. Thanks for joining me today here on Stock Markets with Bruce. Join me every morning at 8:30 in the morning and 3 in the afternoon Eastern Time for live updates on the markets. Take care, everybody. Bye for now.